just talk to a couple of Eurozone messages points before I hand over to you, Evan. What we saw in the Euro area, after 2 consecutive negative quarters, we did see a slightly positive quarter in GDP for Q1. So GDP rose by 0.3%. Inflation, importantly, is sitting in around that 2.4%, and core inflation is sitting at 2.7%, and that's down from 2.9% in March. So that does give the ECB some room to move, and the employment story still sitting at around, I think, 6.5% unemployment rate there. Mm-hmm. So the consumer, the employment story is okay, but the consumer and the business sentiment is still, sort of spending, that spending patterns are still struggling. And so that means it's going to take a little bit of time for them to come out. And I think that's why the ECB are looking to make a move, isn't it, Evan?
It is. So I think that's a great point, Ben, in terms of what's going on with the ECB. I want to put the Eurozone, the UK, to some extent Canada, all in the answer to this as well, because we are going to get onto Australia and we really need to highlight it. There is a clear difference between that part of the world, the US and Australia and the like. And why I say that is Ben just highlighted in the Eurozone, unemployment is much, much higher than it is here or in the US. Inflation's back into levels that are at target. And economic growth, although it's starting to expand in some parts, it's pretty anemic in terms of where it sits. So Christine Lagarde has basically forecasted to the market that they are likely to cut rates in June. Now, be aware the ECB's rates overall are slightly higher than they are here in Australia, depending on which one you want to look at. But it's not just them. The Bank of England and the Bank of Canada are telling the same thing. So there are some parts of the world that will see cuts, and they will be ahead of us. But, and it is a big but, there's reasons for that. They are struggling through the current economic conditions much, much worse than we are. We've got to remember, things are good. Like, this is what I think is so hard to argue here, Ben, is what we're talking about, is that all of this data is actually good data, but unfortunately it means that we're going to have to deal with a scenario we don't like, which is higher rates. So, we're back to sort of terminology we were using in the mid-10s, which was, good news is bad news and bad news is good news. It shouldn't be seen like that. The economy in Australia is doing great, but in the UK, in Europe, and to some extent, same with Canada, it's not as good as it needs to be. And so the one thing to be aware of is that they are likely to cut rates, and therefore there will be a lot of noise again around that. We need to concentrate on what matters to us. That's Australia and the lead that we do get from the US, and that's why we've highlighted that quite strongly.